Hey everybody, this is Brent from Wolf on Wall Street Trade with the market update for the week ending May 8th, 2020. So the big economic data this week was the jobs report, and we had the highest unemployment since the Great Depression, about 3 times higher than the financial crisis. But Wall Street continues to be disconnected from Main Street, and the S&P ended up about 3.5% on the week. So here's the S&P last week, IWM or small caps. Ended up holding support right here at the 50-day moving average, and we can see it tested that on Monday. Let's take a closer look here. And this is a 10-minute chart of the S&P 500. So look where the S&P came down to, 2,800 on Monday, held there. And we got what started off as kind of like a flag consolidation, and I'll show you why as we went through the week kind of turned into more of a wedge. Anyway, the week was very different. Last week was this really strong, move up led by small caps. It was like a dash for trash. I mentioned that in the last video. A lot of the really beaten up stocks ran up over here. I'll show you a few of them. Here's Hertz. It was the, as of last Tuesday, back here the 28th, it was the strongest performer in small caps, ran up 35%. Next day, it was looking at a bankruptcy. So this is what happened since. The cruise lines and airlines were part of it. So here's Norwegian Cruises. This was that big run up here. This week, the CEO was saying that they're having doubts about this company going forward as an ongoing concern. And the airlines, you can see AAL, American Airlines here. So this is that big run up. And then this week, the U.S. airlines said that they were at risk of bankruptcy if they're forced to refund non-refundable tickets. So you see this dash for trash. So that's kind of why I was looking at this range finally being broken out here, dash for trash right there, and coming back down as a potential bull trap. But this week was actually very different in tone. It was all about the mega caps and smashing volatility. So let me go back to IWM small caps. Here's the move up. Here's the move back down into the range. This is the start of the week. You can see why I kind of had a flag for most of the week for most of the averages. Here's NASDAQ 100 up 5.75%. So here is the high from last week. You can see this just ascending wedge, just powered up all week. So that was the mega caps. That was a handful of stocks, the FANGs, Facebook, Amazon, Apple, Google, Microsoft. Let me show you something interesting on the 3C chart. This is the start of the rally, this March rally, March 23rd over here. Really strong confirmation early on, and that was like that for all the averages. And then you can see we kind of get a negative divergence over here, and prices start going more sideways. So this is this week over here. This is that ascending wedge we have. Right at the beginning of the week, a lot of flow came into NASDAQ, came into technology and those mega cap stocks. Here it is, closer view, Monday into Tuesday. That's where all the strength was. And then towards the end of the week, higher in that ascending wedge. Started to lose confirmation on 3C. So interesting with that ascending wedge. Volatility was crushed all week. This is VIX. It was down almost 25% this week. Almost half of that was on Friday alone. So this is Friday. What was interesting was as VIX was getting crushed most of the day, VVIX, the volatility of VIX, was sniffing out something. From about almost 1 p.m. on Friday, it was acting really unusually strong compared to what was going on elsewhere in volatility and just the market more broadly. So early in the week, I had this drawn as kind of a flag. You can see the trend line here and the trend line here. And the reason was there was a lot of S&P sectors that were showing the same thing. This is the material sector, so it's a cyclical. Here's last week. Here's the industrial sector, and this is kind of the flag consolidation. Did not get above this key level over here. Dow Transport's the same thing. Their key level is up here at 8,400 and then 7,800 below. There's 7,800. And the best performing sector on the week, the technology sector, like the NASDAQ, moved well above last week's high and trading in this ascending wedge. I don't like these. Technically, it has a bearish bias as it comes to an apex. The kind of rule of thumb is a wedge retraces its base, but I just think they're very unreliable. I've seen a lot of them. They're not my favorite patterns in the world. But the point is, technology was behind all the leadership for the market, all concentrated in about 5 stocks. Amazon is one of those mega caps, and I touched on this last week after earnings. It had a failed breakout. Did not do that great this week. Actually up about 4% on the week, so not bad. But here's that failed breakout, kind of hanging around the bottom of this pattern. Now just compare this to Apple, which is pretty much, single-handedly leading the market. One interesting thing I did see last week was kind of this quiet rotation into defensive sectors, and more specifically, it was into consumer staples. This sector was up less than 1%, so it was green on the week, but it really wasn't doing much. And you can see this is part of a big consolidation. Here's a wider view. Here's the crash. Here is the initial rebound. These sectors were really strong initially in this rally. They really helped lead the market. You can see what they've been doing for about 3 weeks. Pulling back, this is a bullish pullback. And as we got right to the bottom of this, big positive divergence here, and this is Thursday, so a lot of activity, a lot of buyers coming in. This was actually one of the better performing sectors on Friday. This was the only one of the 11 S&P sectors that I saw any real activity on 3C charts that was like interesting. And where it's occurring is right here at the bottom of this, what I'm just going to call a big flag, a big bullish flag. Here's another defensive sector, utilities. So again, like 3-4 weeks of doing nothing, just pulling back, but it is a constructive pullback. And here's the third one, the third defensive sector, the real estate sector. So if it were me, if I had to be long the market right now, I wanted to be long the market right now, personally, I would be looking at these sectors, and it's interesting that they're shaping up right now as Treasuries made a really big move on Thursday. So is everything just bullish and constructive? No, there's actually a really big development in a really important sector. So let me show you. This is the KBW Bank Index 60-minute chart. So officially closed the week green, up 0.25%, so just barely. But notice this break of trend that we saw last week, and it just got worse earlier in the week over here and did not close back above this trend. So this is kind of an ugly break of a trend that's been going on since March 23rd. Here's a closer look. Again, this is one of those sectors the prior week got ramped up. Really bearish price action the end of last week and coming into this prior week, and did not get back above this trend line. So this, I think, was a really important break. And guess what this price pattern looks like? It looks just like small caps, and small caps have a lot of exposure to the banks. There's IWM, small caps. There's one bank in particular that looked horrible. It looked horrible from the start of the week, and I pointed this out probably about 4 times last week. This is Wells Fargo daily chart. Look at this pattern. This is not what I would expect to see at a market bottom or, going into a V-shaped recovery. That is a really ugly chart. And let me show you on one of the intraday charts. This is this week. Look at this break under this trend line. That is a new closing low that it made on Thursday. So while the NASDAQ went green for the year to date, this made a new low. I mean, this is really ugly. This is a bank you should be watching. This is not like 2008 where it was specifically a financial crisis, but what the market is worried about and what it should be worried about is not a banking crisis, but a crisis of their clients. So when we saw the banks, and specifically the regional banks, really getting hammered more than everything else, that was also as the energy sector was getting hammered. Those are their clients, or at least those are the clients that the market was worried about. I touched on gold, and I like gold. I like how it's trading. I like how it looks. As we saw that defensive sector, consumer staples get some attention on Thursday from buyers. We also saw treasuries doing well, and we saw gold do well over here on Thursday. Pulled back a little bit. So this is a big consolidation, about 6 weeks. Big consolidation. It's a triangle. Also silver. Here's SLV. Here's the uptrend. Here is a descending wedge. This is a bullish wedge, okay? And a breakout from it towards the end of the week. And I don't usually follow Bitcoin. I really don't know a lot about the cryptocurrencies, but early March or just about mid-March, I mentioned GBTC coming up at $5. Looked interesting. I covered it in a video about mid-March, and I said I thought it looked interesting at $5 over here because of this trend line. It came in at $5.01 exactly, and it has run to $12 since. So this is that area, and this is a daily chart. Let me just go out the 2-day chart. So there it is. So interesting. I don't know much about Bitcoin, the halving, and all that kind of stuff, but this is a pretty big bullish pattern, and it's sitting right here at a major inflection point. So this should be interesting. I had never been really interested in them until I saw how much money the Fed and the U.S. government pretty much just dropped from a helicopter. So I'm getting more interested in Bitcoin. This chart, I think, looks really interesting. Okay, what you're looking at here is a 30-minute chart of euro-dollar futures. This is not the currency pair, the euro versus the US dollar. This is the rates market, euro-dollar futures. So this is a 2020 contract, December 2020 contract. This is basically the market at the Fed funds rate, 0 to 0.25 corridor. This monster move on Thursday, and this is a monster move, is the first time ever, we get a lot of these in this market, a lot of record this and that, first time ever that the futures market has priced in the Fed funds rate going negative. The market expects a lot more from the Fed because it expects a lot more bad stuff coming. The 2-year and 5-year yield closed at the lowest ever. Here's Thursday. That's that break. So we have a real clear break of this week's trend. Let me show you what it looks like versus the S&P. So here's the week over here. You can see the kind of wedge. Here's the move in yields. So you have this huge difference of opinion between bonds and between stocks. I love markets like this when this kind of thing happens and the stock market doesn't pay attention, because usually when there's a disagreement between bonds and stocks, and it can go on for a while, but usually it's the bond market that's right. Here we are on a daily chart. Here's the last time they disagreed. The bond market disagreed with stocks, and here we are again. So we have a new low over here for the 2-year and for the 5-year yield. That was one of the biggest things that happened this week. And to put some more context into that, what sector is really sensitive to this kind of stuff? Well, one, the rate-sensitive defensive sectors, and we saw what consumer staples was doing. 2, the banks. Here's BKX again, the KBW Bank Index. Here's the 5-year yield. Here's the breakdown this week. Is it any wonder, because we got the same break in yields? Wells Fargo, very similar. And stocks, S&P 500, pretty much ignored it this week. So this is what I've been saying. The rates market, the bond market does not look like this is a V-bottom. Commodities don't look like that either. Meanwhile, by numerous metrics, the stock market is the most expensive it has ever been. By almost all metrics, it's more expensive now than it was here at all-time record highs. Okay, so that'll do it for this video. Thanks for watching, everybody. If you have questions, comments, again, please leave them in that comment section below. I try to get to them, and I really enjoy them, actually. And also check out the website. I had some free articles up this week, so you can check those out too. Everybody have a great weekend. Stay safe. Members, I will see you on Monday.